We're going to analyze 12 months of my real money trading results. So you're going to see 12 consecutive months of my trading. We're going to go pick it apart. Some good, some not so good. All right, here we go. So you can see the months up at the top there. That's April 2020 through March 2021, it looks like. Okay. We have wins and losses shown. All right, so we have the win percentage, 71.4%. Profit factor, 1.88. Now, right there, I'm just putting my analyze hat on. I'm thinking, hey, I like that. That's a good start. That's a good spot to be in. I'm making money 71% of the time. And of those 71% of trades, winning trades, they're profitable 1.88 times more than my losses. I'm okay with that right there. That tells me a lot. But now look at the gain to pain ratio. 0.88. Now my target is 1. I'd 1 or above. I'd like to get that to 1. But I also know in this method of trading that I'm using, the gain to pain ratio is never super high because that's not the method that I'm using. But the win percent and the profit factor normally are fairly high. Like they're good, solid numbers. I'm perfectly okay having those numbers and sacrificing the gain to pain. The cumulative return, 254,000. Okay, that's fine. Account performance, average return, 877. Average return percent. So I'm making 66% per trade on average. Of what was risked. And then the win ratio, that's the same there. Now look at mistakes. This is really important. Remember, I said we've got to track our mistakes because this is what we get into improving our trading and finding our weaknesses. NIP. Now I use that as an acronym. That stands for not in plan. So in other words, I took a trade that was not in my trade plan. Oof. Yep. I'm confessing now. Yes. I'm confessing to everyone here. I did not follow my trade plan on one single trade for the whole year. Okay. But look what happened. I lost almost $15,000 because of it. Now this is a fairly large account. So that 15 grand, it's not going to devastate the account, but 15 grand is 15 grand. Okay. I don't want to lose that. Not even close. Now, I look at that and going back, I would need to analyze, okay, what happened there? Let's get to the details. What market was it? Where was I? What was my mindset? Was I sick? Was I out of town? Like what happened, in other words? And what can I do to prevent that from happening again? So we want to ask ourselves these questions. And when you look underneath that, the next mistake says wrong size. So somehow I got the wrong position size and also too rushed. Now you can see that's the exact same dollar amount. That's the same trade. So on whatever trade that was, I was rushed, like I was rushing to get the trade, and I put the wrong position size on. And occasionally from time to time, I'll do that. Maybe, 1 to 3 times a year type of thing, maybe even up to 5 times a year. I'll make a rush decision. And when I rush a trade, usually something gets neglected, like position size or the stops placed the wrong place or, something, the wrong ticker symbol. I've done that one before too. In fact, just last year I did that. And so sometimes those things happen when I'm rushing a trade. And so I got to look back and say, why am I rushing the trade? Was I not prepared ahead of time enough? Well, in that case, no, I wasn't. So I have to analyze my own trading and myself. So how can I be more prepared? How can I put myself in a position not to rush? Because when I rush, I make mistakes. Almost always I will make a mistake when I'm rushing a trade. And so I have to really defend myself against doing that again. So again, here you go. Here's my confession right here, guys. You can see it all, the good, the bad, and the ugly here, okay? Now I would say overall, most of that is good. I'm pleased with the results overall. Those mistakes, though, I know I need to reduce what I can reduce and eliminate what I can eliminate. Now, let me show you some more here.